Francesca and Maria, thank you so much for joining us today. We're going to have a really great discussion around some of the transformation that's happening in the real estate sector and a really exciting perspective that women are actually leading this transformation. So, Francesca, I wanted to kick off with you. ESG has been in the news recently, and there has been some controversy around it. So, kind of wanted to open it up to you to kind of share what you're seeing.
Thanks, Kris. In terms of the controversy, we don't really see it as such. We see it as a rather welcomed, prolonged discussion, if you will, over the materiality of ESG, how it should be measured, and ultimately the importance to investors. And we think that the debate is an important step, right? Because we want to make progress towards further institutionalizing the use of the material ESG criteria. For us, it's really important that we use that to identify risks as well as opportunities. So we view the present scrutiny as fundamental towards investors as well as capital markets embracing ESG's potential. And we think that we're still in the early innings of deciding on what's an appropriate taxonomy around what is ESG. So we think that the intense conversation should be pretty productive. And we look back at history. I oftentimes will share with the team, history may not repeat itself, but it does rhyme. So we try to take insights in previous and prior disclosures that we've seen that impact all stakeholders, especially around regulatory changes. And one example, mainly from the equity markets, is when we look at bankruptcies. So when we look at the Enron bankruptcy in December of 2001, and then a year later, we had the WorldCom bankruptcy. These were two of the biggest, if not the biggest ever bankruptcies in history. And what they revealed was a substantial amount of auditing shortcomings as well as aggressive accounting. And as a result, as we're seeing happening right now with ESG, the US Congress promptly stepped in. They passed Sarbanes-Oxley, and it was followed by GAAP standards. By the government in the US stepping in, we believe that they helped to determine what represents those material risks. So they were able to reduce ambiguity. They were able to bring transparency around really what is corporate accounting and auditing disclosures. And we believe that that was extremely helpful and beneficial for investors. So we think it's the same as possible for ESG. And we think it's this, quote, prolonged discussion, as we said. As long as we're focused on material risks, we think that it can be extremely beneficial for all stakeholders.
Right. So to follow on from Francesca's point, on a more general level, with ESG controversy, it can be quite misguided, primarily due to the linguistics and the semiotics surrounding ESG. For those that aren't familiar, for example, when we were looking at the article and doing research, a lot of professionals actually speak of ESG impact as opposed to metrics. And on that note, there's an unceded expectation where ESG amounts to some goal, some physical goal, something quantitative all round, whereas ESG can be quite subjective at all stages and is not something that's interpreted equally by all in all sectors at all stages. So I think a lot of companies that are new to implementing ESG, they expect a certain metric, they expect a certain impact, whether in the long term, in the medium term, or the short term, and that just is not comparable. At the moment, it's more qualitative rather than quantitative. So from that sense, there is quite a lot of misguidance surrounding ESG, hence on a general level, why ESG has been criticized.
So that was a fantastic perspective. Now, Francesca, can you tell us a little bit about what are some of the ESG trends that are emerging in the real estate markets? And I know you kind of have a unique perspective in Latin America.
Thanks, Kris. I think we all realize that the property sector is the largest contributor to greenhouse gas emissions. And I think it's around 40% of global energy use as well as carbon emissions. So that being said, as players of the sector, we can contribute greatly to reducing environmental risk as well as social and governance risk also. And for us, the question isn't whether it should be done, but rather how business is done now. And some of the immediate improvements that we're realizing globally are the use of more sustainable, durable buildings that are constructed with eco-friendly or recycled materials. I think that a lot of the leaders happen to be in the developed world. They're setting those benchmarks and those examples that we can strive towards around things like carbon capture and reuse of recyclable materials. And some of the more approachable solutions that we're seeing have been around smart technology systems. So whether that's heating or ventilation, they can tend to optimize not only carbon emissions around on the operational side, but also on the construction side. And one thing that my colleague Maria smartly mentions in our recent paper is really around electrification. And whether it's mobility or real estate, we see it as a way to achieve net zero commitments within many, many sectors. I should also talk a little bit about the risk for those things that we're not seeing in terms of adoption, because there are still some ESG laggards when it comes to developers as well as investors. And we think it's time to take action and that we can embrace more approachable and sustainable practices, of course, because the risks are very, very high. So for those not leaning into this ESG movement, which we see is happening right now, we think that they're likely to face not only the threat of higher capex, because let's remember that greenhouse gas emission standards will be changing. Let's remember that tenant and investor demands will be changing. When we look at retrofitting buildings, or when we look at older and unrenovated buildings, what we see is that those assets can actually be prone to things like higher taxation as well as regulatory penalties. And that's not even getting into the expectations that institutional investors might have when deploying capital into the asset class. So there are a lot of factors that need to be taken into consideration when trying to embrace ESG. And then in Latin America specifically, what we see is that there has been some recent examples led by some of the multilaterals. If we look at the Inter-American Development Bank, what we see is that they have deployed most recently $10 million into the first zero carbon affordable housing fund in the region. And that commitment was deployed from their Clean Technology Fund, which is specifically created to make capital available for developers, especially in the affordable housing sector throughout Mexico, Colombia, Peru, etc. And we think this highlights some of the adoption throughout the region. Again, as I said at the beginning of the call, we're in the first innings, but we get up to speed pretty quickly.
Well, that was fantastic. And now Maria would like to shift over to you and something that is really exciting. And I know you've done some really good research into a real green transformation that's happening in the real estate sector. And so tell us a little bit about how women are actually reshaping and leading that transformation.
Well, thank you, Kris, for your question. I think the easiest answer would be ESG, and then we could move on to the next question of this interview. But I want to preface my answer firstly by saying that women are leading this sector not due to any gendered qualities. This is quite uncommon. We've seen this before with HR. ESG is the new female-led sector in the finance world. We're not seeing this due to sexist qualities or anything like that. This is primarily because of antiquated sexism that has occurred, which has conversely led to women and female empowerment in the financial sectors. So with ESG, kind of the backwater of finance, as it was considered for many years, still in some emerging markets, not particularly necessary, difficult to invest in, a lot of negatives surrounding that. So such roles get offloaded on the female colleagues to take care of. As a result, we are seeing a huge number of experts who are primarily female because of such displacement of gender within the workforce, who are now leading the markets, who are writing the metrics, who are suggesting the metrics, who are implementing the practices, who are imported into companies as guidance counselors for such issues, where you're faced with a huge governance issue and the only thing you can do is hire someone to consult. On that note, of course, ESG female-led. We are starting to see some parity in Europe, with male colleagues catching up, not so much in developing markets, because primarily they do seek outside counsel, but we are very hopeful that the parity will come. The general trend in real estate is, of course, getting greener, building better, building for long-term investment rather than short-term gain. ESG in the general sense, or to be concise, is preventing catastrophes. And since ESG is female-led, it is an indirect, but in many ways a direct link between women in finance and the outcomes that we see with real estate. For instance, urban globalization is huge. Everyone is migrating to big cities. There's not enough space to build. There's not necessarily resources to build bigger and better. In that sense, ESG is very, very important to make sustainable real estate, to maintain metrics within construction, social and governance as well within companies, and for local communities within which construction and real estate is being developed. So yes, I believe that to round that up, women are leading ESG. ESG is currently becoming, rather than a trend, it's becoming a norm within real estate, which we all really love to see.
So that was great perspective. Now, Franseca, I wanted to kind of come back to you, and can you just share with us what are some of the first steps that real estate investors, owners, operators can take to really identify and seize some of the opportunities in ESG?
So I'll get into the processes in 1 second. I want to opine on a point that my colleague Maria made in the last question number 3, which was that, building and using ESG criteria, especially around the G and the governance, can actually prevent catastrophes. And I have many processes that I can suggest. And one thing that we talked about prior to the call was anticipation. So anticipation should really be the first step. And when we think about anticipation, we think about how many of the poor governance events that have happened recently, whether it's the Grenfell Tower fire, that was a tragic event that happened in London, or whether it was the Surfside condominium collapse that happened in Miami. And what we saw was that there were many red flags that were leading up to a catastrophe that was completely avoidable. And a lot of that had to do with governance and, of course, the principal agent problem that we see that happens in real estate, where we have agents that are in place to protect the principals, the actual tenants. And unfortunately, whether it's a consequence of a moral hazard or regulatory capture, what have you, unfortunately, these tragedies occur. But what we do see is that having strong governance can actually improve these circumstances. Again, with the Surfside incident, we had 3 years of complaints that were given to the management company. And unfortunately, whether it was the management was concerned about bringing those to the decision makers, what have you, improvements were not made. And that led to very, very tragic outcomes. So had those events been anticipated, we believe that there would have been much better outcomes for everyone. So anticipating regulatory changes, anticipating different governance structures, always very helpful. When we look at some processes and first steps, I think the main goal for us has always been to not simply tick a box. It's not just a regulatory box. We've talked a lot about how this is a process. And for us, whether it's an early stage company or a real estate investment, we strive to create realistic KPIs. We want to make sure that we're creating some kind of midterm sustainable advantage or competitive advantage, and that we have a strategy that's unlocking value, because we see ESG as a real value creator. And one way to get there for real estate specifically has been, I talked a little bit about getting buy-in from decision makers, and we want to make sure that there's also a dedicated team that set a performance-based standards, And then with building, of course, we're going to take into consideration things like zoning codes and let the developers and the other stakeholders work out those specifics. So it's step by step. And in addition to the processes, there's definitely a green premium. So I think the importance of allowing all stakeholders to understand the data that you're collecting, your commitment to ESG is extremely important and shouldn't be underestimated, because by embracing ESG through technology, systems, etc., I think that developers as well as investment managers can differentiate ourselves or yourselves from the competition. And one example is the fact that tenants, and myself included, we're consistently looking for great office space, locations that offer high quality, energy efficient, great air filtration, secure, safe. We talk a little bit about how real estate has changed post COVID-19, looking for things like green gathering spaces. All these things kick off that green premium. And we think that that will prevail for those who embrace the new norm of ESG.
So Francesca and Maria, thank you so much for joining us today. I think you really brought a lot to our conversation in the real estate sector. And it was really fantastic to get an understanding on, kind of what the Latin America market is seeing. And so just wanted to kind of leave it with you to share any kind of final thoughts with our audience.
Yeah, Kris, we really appreciate joining you today to talk a little bit about ESG, the role that women are playing in it, and what's happening in Latin America. And I think that the overall message here is that investors, they want better building standards. They want better assets when it comes to real estate, and ESG is here to stay. So we see a growing framework for the property market, and we think that this is very important because it can unlock a lot of opportunities, and it can also make us aware of some potential risks. And by having that information, it's extremely beneficial for all of the stakeholders. So ESG is here to stay. We're glad that we are certainly leading the charge, and we are here if anybody has any further queries about it.
Just to add to that final thought, ESG should be innate. It's becoming innate within all companies, within real estate as well. It has to come from the heart. You have to be invested in it truthfully. It's not something that, you can choose and select and then throw out. For the better of the world and for the better of all company governments and social influence and the environment.
Well, I love that. Well, thank you so much again, ladies, and have a great rest of your day.
Thank you.
Thank you, Kris.